But let's quickly move on. George Alexander Muthoot, Managing Director at Muthoot Finance, joining us this morning. Mr. Muthoot, what component of growth is due to the gold price uptick? 18% sequential is no mean feat. What's driving demand? Give us a sense.
I think what is driving the demand should be the non-availability of funding for the people. So earlier, customers used to get adequate funding from unsecured loans, probably the unsecured personal loans, not the salaried people, the non-salaried people. They were getting that. And second, that is not forthcoming now easily. The small business loans also, are not a little hard to come by today. So, and added to that, the microfinance sector has also seen quite a lot of upheavals, and many of them have pared down their disbursements. So overall, the availability of funding is reduced, and therefore people are looking to monetize the gold ornaments and take collateralized gold loans. That is, I think, the main factor which is driving the demand. Of course, the gold price hike also helps because a person with small quantity of gold can get a larger amount today with the same quantity of gold.
That's extremely interesting. Now, talk to us about new customers. Is demand from there sustaining? Because obviously you're suggesting that this is coming from new customers, but talk to us about the quantum of that, whether the numbers are sustaining.
Yeah, as long as people require funding, and as long as people require funding for their daily use, business, consumption, etc., demand will continue. And demand will continue, and new and newer customers who are now seeing quite a lot of news about gold and gold ornaments and the gold price. So they are feeling that the gold which they have is quite valuable today and can be definitely monetized to get the fund they require.
And growth for FY27 on this higher base, will it be 10 to 15% at the very least? And how much of this is likely to be linked to gold prices, in your opinion?
No, nothing is linked to gold price. Everything is linked to demand. And that is what I see today. Even the government of India has realized, and the regulator has also realized, that people need to be provided with funding. And gold loan has been a good sector. There has been a good growth in the sector, not only for the NBFCs, even for the banks. NBFCs have about 3 lakhs of gold loan portfolio, whereas banks have about 13 lakh crores of gold loan portfolio. So there is good demand. And I think in the next year also, the same demand and same demand for gold loan will be there, both for the banks as well as for the NBFCs.
Interesting. And what's the loan to value currently? What's the risk if the gold price falls? Give us a sense of that.
Yeah. See, what we give today, or the gold loan to value which we are supposed to give, the maximum of 75%. But most of the people don't take all the 75%. Some people take 75, some people take 60, 65, etc. For the disbursement value, the average gold would be less than 70%. But if you take the total loans outstanding as on books and the total value of the gold with us, the loan to value is only 57%. That means there is headroom for a big margin of 43% still available in the gold price itself. So the gold price this is not a commodity lending. This is a lending on the household used ornaments. We don't take bullion, we don't take bars, we take only household ornaments on which there is a making charge, maybe of 15%. So 100 rupee worth gold is actually worth 120. And there's a sentimental value. So we have seen the last 10, 15 years after listing itself, we have seen ups and downs for gold price, but people don't abandon their ornaments because of this. So we don't see any downside, even if the price, there is fluctuation in the price. But of course, there has never been any big fall in the price. Always fluctuations are there, which people tend to accept.
And with regard to tonnage, that's one concern, right? That has fallen. Is that a concern for you?
Yeah, I think the tonnage is actually dependent on how much the people want. See, if 1 year back, 3 months back, the loan is actually for a period of only, actually the the real tenure of the loan is only for 3 months. People take back in 1, 2, 3, 4 months, and the average tenure is only 3 months. So every 3 months, the portfolio gets churned. Now look at somebody who wanted a lakh of rupees. He had to go 4 bangles 6 months back. But today, because of the price hike, even with 3 bangles, he can get the same money. So the earlier person who gave 4 bangles took it away. New loans are priced with 3 bangles. So definitely, when the price goes up, the average gold required for the same loan is much lesser. So the tonnage has to come down.
Okay, and with regard to the repo cut in December, how is transmission happening for you? You've guided that you will pass through the entire repo benefit to your customers. Give us the rationale for that and how it'll play out in terms of transmission.
Central Bank has reduced the repo rate more than once. More than once, it has come down by 50%, 50 basis points. But the MCLR of banks have not really come down. MCLR is the rate on which the banks lend to NBFCs like us. So that rate has not really come down. Although the repo rate has come down by 50 basis, the lending rate to us has not really come down. So the trade transmission from the banks to borrowers like us has not really happened. So our rates have not really come down. Of course, maybe instead of 50 basis points, 10 or 15 basis points would have been the reduction. So it will take 1 or 2 quarters more for the banks to pass it on to us. But for us, we charge the customers only if the cost of borrowing is low, we pass on the benefit to the customer. We are interested more in the net interest margin and the spread. We keep the spread intact. So if the cost goes down, we pass it on to the customer. If the cost goes up, we again pass it on to the customer. We keep our net interest margins and the spread intact.
Okay, and talk to us about competition. How is that shaping up? Plenty of new competitors coming in and doing gold loans. Is there any yield pressure due to this at all that you're seeing?
No, because competition has been there always. As I said earlier, the banks have a huge portfolio of gold loans. They give it as gold loans, they give it as agricultural gold loans, they give it as business loans. But overall, the gold loan portfolio of the banks, as I said, is more than 13 lakh crores. The NBFCs are about 3 lakh crores. We have grown decently in the last quarter up to this financial year. For the 3 quarters, we have already grown by 36%. So it is not that somebody is taking away our business or we are taking away somebody else's business. There is a lot of room for players. The market is expanding. More and more people are resorting to gold loans. That's what I said earlier. More and more people are resorting to gold loans. So there's a huge market and there is space for banks, NBFCs, etc. It is not that competition is taking away somebody's business. The banks have definitely a rate advantage because their cost of fund is very low, so they have a rate advantage. Nevertheless, there are customers who seek for quality, for their convenience, etc., coming to NBFCs, and we have the same customers who come to us, and there are customers who go to banks. So they have their set of customers, we have our set of customers. Both of us can grow equally, even when there is competition. You don't call it competition, it is just more and more people taking gold loans from both banks and NBFCs.
Right. And RBI's new regulation to allow opening of new branches, less restrictions there. How much of a positive is that for you? Is it neutral for you? How should one view it?
It goes to show one or two things. One, it goes to show that the regulator is quite keen to expand the gold loan business. That is why they have said that earlier there was a restriction on NBFCs, large NBFCs with more than 1,000 branches to seek RBI's prior permission before opening a branch. Now that has been lifted. Again, that shows the confidence of the regulator in the large NBFCs. So here, going forward, we do not need to ask their prior permission. We can open the branch. This is just open the branch and then get it ratified or inform the regulator. Of course, this is only a draft regulation. I'm sure usually such draft regulations come back as full regulations shortly. So the point here is the regulator is quite comfortable with gold loan business, and the regulator is also very comfortable with large NBFCs. This is the message we are seeing with this. Now, just because the regulators said we don't need to have prior permission, it's not that we are going to open 1,000 branches, etc. We usually open about 100, 150 branches a year. Probably the same 150, 200, 250 branches we'll be opening going forward also. But the more than the branch permission, it is a message which is being sent that the regulator, the Ministry of Finance, etc., are quite comfortable with gold loans and NBFC gold loans.
Okay. Thank you so much, Mr. Muthoot, for coming in and giving us that perspective. We'll let you go on that note. And of course, the stock of Muthoot Finance not